Alright everyone, and welcome back to the channel for another Bitcoin update. So yes, you read that title right. This is a huge warning for any Bitcoin bulls. I don't want to waste any of your time, so let's jump right into this video and get this out as quickly as possible. In this, I'm going to talk about what I think is going to be playing out in the immediate short term, my short-term price targets, where I think the next macro leg is going to be down to, where can we potentially bounce from, where is the bear market low, and then why is Bitcoin breaking down. We'll be talking about the news and the stock market with all of this. Let's jump right in. So starting off, let's actually start off with the rising wedge. I talked about this over on Twitter yesterday. We posted this, and as you can see, Bitcoin was at the bottom of my rising wedge with the bear knocking at the door. What do you know? We've broken to the downside of this. We've absolutely shot through the floorboards on this. If we look at the volume, depending on where you're looking at, there is a lot of volume coming in. So for example, over on Binance, we've almost got as much volume as we had yesterday. If you look at some other places like Coinbase, Bittrex, Femex, Bitfinex, I won't pull up all of these charts, but nonetheless, some of these have more volume coming in today than we did yesterday. So we are getting a volume confirmed breakdown on this rising wedge, volume confirmed breakdown on this bear flag. In terms of the rising wedge, the price targets that I would pull for this would be down at your 618 Fibonacci at 20,500 and your 786 Fibonacci down here at 19,300. So in the immediate short term, these are my two major price targets. 20,500, that's where we're going to be attracted to in the immediate short term. About another $1,100 drop. We could potentially have a bounce from this region. If we don't have a bounce from there, we'll have a bounce at the 786 Fibonacci at 19,270 before engaging on that next leg back to the downside. This is when I think we're going to enter our bear market lows. I've been talking about my bear market low targets for quite some time. We'll pull them up on this chart over here in just one second. But as you can see, Bitcoin rising wedge is breaking to the downside. Bitcoin bear flag is breaking to the downside. So I'm happy we stuck to our guns on this one. Honestly, this is textbook TA. This is, you know, TA lesson 101. Don't get bullish in a bear flag. It absolutely shocks me how so many people got bullish while we were in a giant bear flag. But it is what it is. You know, everyone's not me. I do my own trading. I am a contrarian trader. So seeing all the retail FOMO in, seeing all the retail get bullish, this was basically just confirming that, you know, my theory on this bear flag was right, because as we always say, my friends, retail is normally wrong and retail thinks the bottom is in. So the bottom is not in. We're going to be continuing to break down to the downside. You can see on the daily time frame massively slipping down on this bear flag. Pulling up the 4 hourly, you can see really for the past 24 hours, but specifically in the past 12, we've been rocketing down. I mean, just look at this volume coming in this market structure. We've got exponential volume that just keeps pushing Bitcoin down. So if you were looking for a bounce or something, you'd want to see volume or bearish volume start to subside and bulls start to step back in. And it's just not happening. I really think the breakdown is only just starting. Now, one other thing that I would like to say on both of these charts before we do move on is this tightening range. Now, you might be looking at this and thinking, what is this pointing to? What is tightening? Well, let me show you. If we pull up, not the moving average, but this is also very, very key to see. You can see that we've basically every single time you flip bearish beneath the 100-day moving average, you normally have a major capitulation. We came into the 100-day and now we're capitulating. So just another sign of, you know, bearish momentum stepping into this market right now. If we pull up the EMA ribbons, let's pull up the VPVR. We've broke down from the next major volume cluster. So 21,500 down to 21,200. If you start seeing breaks beneath there on the VPVR, it's going to be even uglier and you're going to get continuation. So let's look at the EMA ribbons. Now, I really only like to focus on the short-term moving average and the long-term moving average, get rid of everything in between because it's not too important. Let's get rid of the volume, and what I want to show you is these tightening and thickening phases. So right here, you can see the EMA ribbons were tightening. Right here, you can see the EMA ribbons were tightening, and what I mean by this is they're just getting closer to each other. They're looking like they're going to get collided, or they're looking like they want to squeeze together. And every single time these EMA ribbons tighten, they're like Bollinger Bands. You know, the tighter they are, the more of an explosive move you're going to have to the upside or the downside. And depending on what the market structure's like, let's pretend this was bullish and this was green, you could see these tightening phases would correlate to bullish flips when you're in an uptrend. And it's the same when you're in a downtrend on the inverse scale. When the EMA ribbons are red, when they start to tighten, when you come back and back test them, you're really likely likely to start witnessing an explosive move back down. You can see, test the EMA ribbons, they tighten, break down. You test the EMA ribbons, they tighten, break down. You test the EMA ribbons, look how tight they got here. It is absolutely no surprise as to why we're having an explosive move to the downside. In previous times where we retested these after a tightening and had a breakdown, we yielded a 33.5% drop and a 45.6% drop. If we pull up the BTC price, I've been saying I think we're going to bottom between 17,000 and 14,000. So from where we are now, we're absolutely rocketing down. I should have done this from the breakdown from here. So 23,600 is where I'm measuring the breakdown. 23.6 round about here. Let me just double confirm that. 23. Or I should be measuring from the top. 25.3. 25.3. 25.3. Yeah, from the top here. So if we were to continue, you know, previous times we had 34% drops, 45% drops. A 33% drop would be down here at 17,000, which would beautifully line up with your 300-week moving average. We'll talk about these in a second, but this is the reason why I think 17,000 is one of the bottoming regions. I personally am aiming for between 16,000 to 14,000. So this secondary green box down here, I'll mark this darker green box, which is kind of hard to see now. We'll sort this out in the future. Let's just mark this white. This white box down here, this is really where I'm going to be hedging my bets to. So in the immediate short term, and wow, you can see Bitcoin has dropped about another $200 in the past like 20 seconds or so, but another 25 to 34% drop to the downside is what I think is going to be playing out for Bitcoin. So 25%, let's be conservative, 16,000, I will see you there. Let's talk about the EMA ribbons and specifically, you know, why we have this 17,000 target. So if we can see this, you know, we can zoom out, you basically see every time, well, bear in mind, we're looking at the 300-week moving average and the 200-week moving average. So to start off with these, you need to have 200 to 300 weeks worth of data traded. So it's, you know, we don't have the longest amount of data traded on these moving averages. But what we do know is you break beneath the 200, you very quickly return to the 300. And we haven't really yet approached the 300 that closely. I mean, we got kind of close to it, but not as close as I would like to see. So I would say if you're a little bit more conservative than me and you don't want to target 16,000, if you think 17,000 would be the absolute bottom, then this is kind of what you'd be thinking would be playing out. Another 20% drop down to 17,200. Once again, where the 300-week moving average is going to reside, I think this is very conservative. Even another 20% drop from here would literally just be putting us on the 300-week. So I think that is a good place to potentially bottom. I don't think that's where we're going to be bottoming. Like I've been saying, 17,000 is a really good place to start buying. Don't get me wrong, as soon as we break beneath this red line, I think we're going to be in the final capitulation. So whether you buy at 17, whether you buy at 16, whether you buy at 15, whether you buy at 14, and then it ends up bottoming at 13 or 12, who's really going to care when Bitcoin goes on a bull run to, you know, 150,000, 200,000, 250,000, and then if you're holding it for multiple cycles, you know, millions of dollars is what I think Bitcoin is going to, which is why I've been buying it since $600, $700. This is why I've basically not sold any of my Bitcoin for 5 or 6 years now. I'm in this space for the long term, but in the immediate short term, I am bearish. My hodl stash for Bitcoin, my ledgers, my Trezors, my hardware wallets, that is on the side. I'm not selling that Bitcoin. You know, even though I'm bearish for another move to the downside, my hodl stash is untouched. I've bought a ledger recently just as a receiver address, just to receive Bitcoin. I'm going off topic, but nonetheless, I do want you to know, if you are new to the channel, welcome to the channel. I am not a perma Bitcoin bear. I am one of the most bullish people you ever meet on Bitcoin. I think it's going to millions of dollars, tens of millions of dollars. I think it's just, there's so much to it. But nonetheless, in the short term, 16,000, 14,000, this is what I think is going to be playing out. I want to start wrapping up this video, talking about the news and talking about why we've been breaking down. But first of all, let's look at oscillators and momentum indicators. Are we going to get more continuation? Well, looking at the price action, well, price action alone is pretty indicative that we are going to get more continuation. But let's look at our oscillators. The MACD. MACD is drastically dropping. Look at the histogram on the daily. I mean, this is brutal. MACD is above the heart line, so technically we are overbought, and we're very likely to have a massive cascade off the hill. The MFI, I don't want to talk too much about this because I'm literally going to make a video separate on the MFI and the RSI. A couple of people probably know what this is going to be or what this is going to entail, but nonetheless, I'll get this one out. This is more important, and then we'll talk about these fractals a little bit later. So squeeze momentum indicator, this has started to tick into red, meaning that the downtrend is literally in play at this moment in time. You can see throughout this entire time, bulls are in control while we were in this bear flag, we're in the rising channel, whatever you want to call it. But at this moment in time, squeeze momentum indicators starting to tick to the downside, MACD starting to head down, MFI is starting to head down, retail's getting spooked, prices moving down, oscillators momentum indicators have really not even flipped bearish yet. Like I said, things like the MACD, they're above the heart line, so technically while they flipped bearish, they're still in bullish territory. On the lower time frames, MACD has only flipped bearish, squeeze one has only really just started gearing down, and the MFI is a bit oversold, but everything all in all, it's brutal. I think we're going to have another major capitulation coming very, very soon. Where do I think that's going to come down to? Like we said at the start of the video, if we look at the rising wedge, we get rid of this. I do expect very, very minor bounces, probably from your first Fibonacci targets, probably like your 786, round about here. So 19,300 and also 20,500. We probably will have a bounce from there, even though it will absolutely not be the bottom. You can see VPVR support is here, so we might have an option for the next hour or so. I would not be counting on it. I think we're going to be breaking down. So final segment of the video. Now I want to talk about why is Bitcoin dumping? Well, let's start off with the stock market, the traditional markets, and then we'll talk about the news on why it's dumping. Well, very, very quickly, whether you're looking at the NASDAQ, whether you're looking at the S&P 500, we talked about this before, so I don't want to dive into it. We are running into resistance. And previously, when we pulled up the SPX fractal, which I will do very, very momentarily, you can see this is what we were talking about for the SPX, the S&P 500. This is the 2008 recession fractal. Now, it is really as simple as going back to the 2008 recession, 2008 bear market, taking a price grab of the chart. So if we pull up the bar pattern, what we've done is we've just taken a copy and paste of this bear market here, copied it, and pasted it right over from the top of the current bear market that we're in 2022. And according to this 2008 stock market fractal, we should be topping out today. Really, just a quick update. What I wanted to let you know on this is we're running into resistance for the stock market. All the stock market indices and individual stocks are getting brutalized, and this is all happening while the dollar is breaking out of this beautiful bull flag right now. If we pull up the EMA ribbons for this as well, you can see, look at this, we're just rocketing up. We've got everything we need to see for bullish continuation on the DXY. The bull flag breakout would be up here at basically 111, and 111.5 is where your 1.618 Fibonacci is is where your 1.618 Fibonacci is going to be from your high to your low down here. So I really think this continuation in the dollar is going to continue to happen. We talked about this all the way back here around about the 10th of June. We were predicting another 7% move up for the DXY. We've done over half of it. We've got about another 3.3% to move to the upside, and I really want you to take this into consideration. The DXY is up 0.4% today, meaning that we've got about another 8x to go, not 8x, but we've got about another 8 times the move that we've done today until we come up to these targets that I think we're going to be coming up to. And you also have to look at the fact that the DXY is up 0.4 and Bitcoin is down, 7%, 7.3, depending on what exchange you're looking at. And this should be indicative that with the dollar rising up to these new highs, Bitcoin is going to get absolutely battered. So that is reason number one. The SPX, the stock market, S&P 500, NASDAQ, whatever you're looking at, all the stock market indices, they all look like they want to break down. They've all finished rather their bear market rally, and the dollar is once again resuming its run to the upside. Now, wrapping up this video, what is the second reason outside of the TA why the markets are going to have a lot of volatility and probably dump today? Well, if we head over to the options expiration calendar over on Market Watch, you can see August the 19th, technically it happens tomorrow on the 20th, but also technically it happens tonight at like midnight. So really the options expire today, and subsequently there's going to be a lot of volatility coming into these markets. They're expiring today on Friday, so obviously they're not going to be open over the weekend, so Bitcoin's going to have free reign over what to do. So don't expect too much from Bitcoin in terms of decision making over the weekend times. But what are the options that are going to be expiring? Well, we've got 2 to 2.1 trillion worth of options that are set to expire. So I mean, like I said, it's really as simple as a lot of volatility is going to be coming into these markets. If we look at the breakdown for the options that are going to be expiring, you can see 770 billion alone is going to be in the SPX. Almost 200 billion is going to be in the SPY. We've got about another 200 billion in the SPX PM, and in single stocks about 440 billion. So there's a lot of money in this. I mean, if we just simply look at the SPX alone, this is going to be absolutely brutal when the settlement comes out and when the options all expire. So once again, my friends, expect a lot of volatility coming into the markets. I really think as the stock markets come to close today, towards the end of the day, we're going to see some very, very violent moves. And with that being said, that is all I've got for you in this episode, my friends. I look forward to updating you a little bit later on today with this fractal that I see playing out. But at this moment in time, just a quick warning for all the Bitcoin bulls out there. I'd also like to say, you know, we stuck with our guns on Bitcoin for quite some time right now. You know, people were saying, you know, the Bitcoin bottom is in, and I would also kind of like to say I find it very, very scummy, the amount of crypto Twitter influencers, the amount of crypto YouTubers that have been bullish over the past couple of days, because a lot of these people have been making, you know, YouTube videos for years now, you know, from the last cycle, and these people should know better. These people are basically using you for views. We've had bear flag breakdown into a bear flag breakdown into a bear flag breakdown, and some of these crypto people have been telling you, hey, now's the time to be bullish, now's the time to open positions and start trading, use my, you know, FEMEX sign up code so you can go trade. They're literally just using you for money, and as you can see, we're breaking to the downside. So I will always maintain a high level of integrity on this channel. There will never be any clickbait on this channel, and as you can see, once again, retail flipped bullish. As I told you, retail was normally wrong, and as everyone was starting to flip bullish, I was saying, hey, probably the time to break down. This is what we're seeing. We're seeing continuation. Expect a more brutal drop in the Bitcoin price in the immediate short term. So 20,500, that's probably where we're going to be in the next day or so, down to the 786 Fibonacci, 19,300. That is the next pit stop to the downside before inevitably 16K is on the table. All I've got for you for this episode, my friends, and as always, cowboy out. Peace.